Okay, we're back for our weekly outlook on the Nasdaq. Last week we went in without a bias, and even though we had Jackson Hole Symposium on Thursday and Friday, we still managed to get some really good trades on Monday, Tuesday and Wednesday. So we're going to be starting on the weekly chart. As you can see, last week we started off at 23,793. We traded all the way down to 23,040, and then we leave this wick here, and then we trade back through that, closing at 23,568.75. So what that does is it validates this bullish order block as a PD array that you should really be looking at. It's a weekly order block, and we did trade past the mean threshold, the mean threshold being the middle, the consequent encroachment, whatever you want to call it, but we closed above the order block. So that's a really good sign of speed. If you see that on a 1 minute chart, for example, where you trade through a PD array with a wick but then you close above it, it's a good sign that you're about to get some more incoming speed. And the same goes for a weekly chart, so I would expect some faster price movement next week, well, tomorrow, and I want to be looking at this wick here as our key levels. So what we're going to do is I'm going to grade this wick like so, and then these levels are going to be very important for telling the story of what's going to happen. So if we open up and then we open up lower, for example, we get premium new day opening gap, new week opening gap, and then we trade into the consequent encroachment of this wick. To me, that would be a buying opportunity, or, well, I wouldn't necessarily buy at that level. I would wait to see bullish reactions where you can get confirmation that we're going to keep going higher, and that would be in the form of a higher time frame market structure shift, like a 4-hour market structure shift, a displacement above an old high where we run the high instead of sweeping it. And this is also supported by the fact that we're in all-time high conditions. So on the daily chart now, I want to talk you through how I do my analysis. Broke through this stage of the market where we had just back and forth price delivery, and now we're getting some, even though it's back and forth, it's larger price movements, so we can still work within this range really well. The first thing you always want to ask yourself when you're predicting what's going to happen for the week is, what are we reacting to, and where is the likely expansion towards? So we reacted to mean threshold of the order block, this weekly order block. So we traded through with wicks, but then the body's closed right above the mean threshold. A really good sign of bullishness. Now on the daily, we're also reacting to this as a bullish order block. So say now we're reacting to the bullish order block, and then we have a likely expansion higher into these 4 or 5 lower highs. These being high, a lower high, lower high, lower high, lower high in the form of wicks, not swing points, makes that low resistance liquidity. Is it as strong as it would be if we had lower high swing points like that? No, but it is still a valid draw. What's tricky here is that we've traded off the bullish order block higher, and then where's the likely expansion? Is it this lower resistance liquidity, or is it that now we've reached the inverted bullish order block or the SIBI? You could argue that we've filled in this imbalance and now we don't need to keep going higher. When we go to the lower time frames, I'll show you why I think we will keep going higher, and at least into this high. But coming back to the point of how do you do these weekly outlooks, ask yourself what is price reacting to, where is it drawing, and what is the more likely scenario, bullish or bearish? And then is there a likely scenario, or is this just too hard to read? Okay, so what we're looking at here is the daily chart for YM. Now we haven't reached all-time high on YM yet, and we have had this bullish S&T divergence with the Nasdaq. So I think it's to be reaching up into higher prices on both YM and NQ. So it looks like YM is going to start running into its all-time high up there. And then we have these smooth highs on YM as well, which in turn should lead the Nasdaq to fetching for higher prices. Okay, so I'll drop into a 15-minute chart just so I can show you where I've got these standard deviations marked out. We get our London session run on liquidity, and then we trade back higher. That made this affected low because we trade into the fair value gap, trade through this short-term low, and then we have other short-term lows on the right-hand side of it, making this an intermediate-term high. We don't want to see this get taken out. So we can apply standard deviations to the London range, and then we can look at which ones align with pools of liquidity. So we have this one over here, 2.5 standard deviation. And then we have all the way up here, the nearest one being 4.5, which takes out our previous week high and all of this smoothness over here. So where am I aiming for next week? I'm aiming for the previous week high. That is my draw. Now I'm going to go into swing grading. If you watched the live stream on Saturday, when we went through swing grading, we're looking at implied ranges. So where did this price move start from? You can argue that it started from here, and then you could also say it started from here. I'm looking at this one because this is the more recent impulse price swing, and that acts as a refined implied range. So then you take your little boxes, and we're looking at anything past the origin of the price move, being where the price move started. And we want to look for areas around our quadrants. So at equilibrium, what did I say in Saturday's stream? At equilibrium, you're very much more likely to consolidate than you are at any of the other quadrants. Because we didn't consolidate at our 0.25 level, what can we expect? We can expect consolidation at our equilibrium, and we can expect us to go into our upper quadrant and then drop down into an order block that forms in around equilibrium and then shoot back higher into our terminus point. So assuming our terminus is correct in going for our previous week high next week, if we're expecting consolidation here, and it is impossible to say how long the consolidation will be for, but you want to see this consolidate and then drop down below that consolidation low into this BISI, maybe even into this breaker block high, and then trade up into the upper quadrant and then either blast through the upper quadrant or be stopped around this area, drop down into a bullish order block around equilibrium, and then trade back into the high. So if you were in Saturday's stream, you'll remember that I said it's better to do these on higher time frames so that you can drop a time frame and you can see the fractal nature of it, and then you can also see more trading opportunities. So that's what we're going to do now. We're going to go down to a 15-minute chart. Then Monday we don't have any high impact news, but we do have some medium impact news going into 10 AM. So I would expect Monday's New York Open to sweep the consolidation low and then go into the BISI and the new day opening gap and potentially even trade into the breaker block and then jump higher into terminus. Now, I'm not saying we'll jump all the way into terminus point on Monday, but we should, after manipulating this, start trading towards it as our draw on liquidity. So that's going to act as our magnet for the week. Monday, I'm either picturing it consolidating and then Tuesday sweeps the low, or it consolidates into the New York Open and then Monday's New York Open sweeps the low and then trades higher. So those are the two situations I'm preparing myself for. Now, my classic buy day template. Remember in the live stream where I mentioned that you should align yourself with the consolidations with your buy days? Well, that's what I do at least, and it gives you really large expansions. So the majority of the time that setup forms on Tuesday. Sometimes it can form on Monday as well. So on Monday is where I would want it to sweep this low between 2 AM and 4 AM, basically the London kill zone, then trade higher. Or I'm looking at Tuesday doing that. So we either trade up into our upper quadrant and then we drop down lower into an order block, or we trade up into our upper quadrant on Monday and then Tuesday comes out and sweeps this low before going all the way into our terminus. Okay, and then Tuesday we've got again medium impact at 8:30, medium impact at 10 AM. Wednesday we have nothing, so maybe Wednesday we can expect more of a consolidation day. Thursday we've got unemployment claims, that's a big one at 8:30. Pending home sales at 10 AM, that's another big one. And then Friday we've got more high impact at 8:30. So I'm expecting a pretty nice week, and I know exactly what I'm looking for this week, and that's higher prices with a manipulation of this consolidation though. But the first thing I would want is more consolidation. Can I predict that we're going to get more consolidation or less consolidation? No. But can I prepare for it? Yes, absolutely I can. So if we sweep this consolidation going into the open or at the open, my plan is to buy and trade towards terminus of the implied range. Again, that doesn't mean it's going to trade up all the way there on Monday, but it's just going to draw towards it. Or that will happen on Tuesday. The other thing I could see happening is we just trade up into the upper quadrant, don't do much going into the open, then the open drops into a bullish order block here, or it sweeps that low, and then we start trading higher, and then we close Monday out lower, and then we open up Tuesday going higher into our terminus point, or towards our terminus point, like there. So that's my prediction on the week. Hopefully you can take away something from that. If you're not understanding what I'm doing with the swing grading, then you can watch the live stream that we did on Saturday.